What is up, boys? We are back with another trade recap. We're going to go over this real quick today. Looks like we're getting a second setup, or another setup right now, actually. It's going to be a 30-second inverse, but we did take this internal high. So if you've watched my other vids, you know that the inverse is invalid if we take the internal high. Oh, whoops. You guys can see that. Anyways, this is what I was talking about right here. Took the internal high. But let's get straight into it. Start off on the 4 hour. First thing in the morning, we noticed that this wick right here is ginormous. This wick is about 130 points. So, what are we rejecting out of? Let's look. Ooh, a daily gap and daily order block right here. So, because that rejection is so strong and we are rejecting out of two very high time frame prominent key catalysts in price action, I am not expecting price to come back down and resweep this wick. So, we don't think it's just going to shoot right up to these draws right off rip. We have to identify somewhere for it to come down to before doing so. So I saw this 1 hour gap and assumed that we would have some type of accumulation, manipulation, distribution. And that's exactly what happened here. I'm going to go on to MNQ real quick. So this is important to realize. We accumulate right here. Obviously, it's a lot. It's very discretionary. It's not as easy as I'm making it sound by just drawing these boxes on the screen. Manipulation, taking out all these lows, and then distribution. So we are in a buy model, and it's very clear. This is the original consolidation. We come down into the hourly gap. Let's mark that out. The candle closure was a little sketchy, but it's been like that recently, and I've honestly just been dealing with it. As long as the lower time frame price action shows that we are looking to go back up, I don't worry about seeing like super strong rejection with the wicks. But if you do, it can really help your thesis. So we should already be thinking we're in a buy model because we have established a point to come up off of. The trend is switching from bearish to bullish. We're now coming up. We've created this range. We are accumulating. So now, what do we need to come down to? We identify the 1 hour gap. Am I just going to long as soon as we come into the 1 hour gap? No. 1, because this was at 6 in the morning. 2, because we need more confidence. And I personally trade the New York AM session, so obviously I'm going to wait for that. Alright, let's finish drawing this buy model out. And we'll put that right there. I hate how I can never get these to look like perfect. Alright, anyways, on the 15-minute now. This is the hourly gap. That also is a 15-minute right here that we came into and pushed right back up out of. And keep in mind, when we are measuring out the range that we came up with to start making the accumulation, where is equilibrium? Right here. So this is just even better. We're retracing to discount of the range that we just made, taking out the lows. We reject back up, inversing this huge 15-minute manipulation candle. Now we open up this 1 hour gap. And off of market open and pre-market, we kind of fall down into that new 1 hour right here. Mark that out. Which is exactly what we want because it's the same thing. if we go on the 5 minute now, look. You can think of, or it's going to be better on the 1 minute. What is it? It looks like the same thing, right? Accumulation goes to about there. Manipulation is when we see it's obvious that price wants to come down into a PD array and manipulate the lows, and then distribution back up. So we identified all these different little things to get us to have this larger idea, higher time frame picture. So now let's put it all together. We're obviously very bullish. Before market open even hits, we are coming down into the 1 hour gap. Now we're super bullish. We need to see us shoot back up. Oh, and one more thing. We can measure this range as well. We are also respecting 0.5 and bouncing back up off of it. If you guys want to know what this is literally just the Gone box, and here are my settings. I made it myself. I really like it. If you don't want to use that, you can just use a fib like this. Look, 0.5. I have my own custom levels on here that I like to use. But yeah, so we're coming now out of the 15 minute right here and the 1 hour. Very good displacement. Let's look lower time frame to see what's really happening. We get this great inverse right here. I was a little sketched out because it was a little quick. Usually we dance around a little bit, maybe sweep out some liquidity, make an SMT, and then get an inverse. But in this case, we made this inverse right away, and my TP was like right here. I was thinking about just going for a 1-to-1 because my stop was at the low of this candle. So if I would have gone for a 1-to-1, my TP would have hit, but it's all right. I got edged break even. Luckily, I went break even right here at the first internal high. I know it seems risky, but it's really the opposite. You're taking risk off as soon as you go break even, so you want to do that as soon as possible. And the whole idea of this inversion is that we are catching the distribution prematurely as the inverse happens, and then it's just going to shoot right up to our drawn liquidity. So that one didn't work out, but look, we have another one that happens right here. It was kind of weird that we didn't get an SMT, I'm not going to lie, but the idea was still super strong, and we were still pushing the same narrative, and we didn't lose track of that narrative at all. So I was ready to take the same trade, and that's exactly what I did, and it worked out great. This was it right here. 1 minute inverse with very good displacement. Obviously we had to get a little creative with our TP. I probably should have just put it at these highs, but lately I've really just been going for the most high probability setups. I probably should be going a little more risk on with my TPs because I do need to pass this account that I'm trading. But it's gone pretty good so far. This is our third day on this account. We have it up to $1,674, and I am excited to pass it. Just need to focus on taking small losses and win as much as possible. But yeah, anyways, that is it. Trying to think of some questions people have. But yeah, feel free to ask questions in the comments. I know you guys don't always do that, but I do like answering questions. So this right here, I haven't even looked at yet, but I guarantee we got a mech model set up. Is this an SMT? No. I don't really like to take mech models unless it's like a perfect SMT scenario. Yeah. Yeah, this is a pretty good setup right here. The only thing is you have to take it off of... Oh, you could take a 30-second inverse. Oh, this sucks. So in this scenario, you would have gotten break even. Like, just barely. You would go break even at this high right here. Now you break even, and looks like it came back down, would have filled you, and then tapped it again, even if it somehow missed you. I'm just trying to think of what, like, if there'd be something better to enter off of. Because there's no 1 minute gap, there's no 1 minute CISD. There is. I mean, this candle close is pretty strong, and it's not like a 30-second gap is gonna like kill us. So you could enter right there, go break even there, and you would have been fine. But I didn't even take this trade, so we're not worried about it. Alright, that's going to be it for today. Hope you guys have the rest of your day. Stay blessed. Stay smart on the charts. And make sure you go out there today and get some productive stuff done. Make sure you're journaling, stuff like that. Alright, peace.